on, guys? So I wanted to talk about accounting and the finance department and how it's significantly important. I don't want to say more important than every department plays their role, but it's significantly important, and it's 9 times out of 10 overlooked by most freight brokers or logistics consultants in our obviously in our industry. So you've probably already, if you follow me, you've heard me talk about this a ton of times. I'm going to point out a couple questions, why I ask these questions and what I'm trying to get out of these questions, and some of the challenges or outcomes that throughout my 10 years is what I've been able to uncover with just like these 2 questions, right? I'll go a little bit more in depth with it, but so question, right? So when I'm qualifying, meaning I'm not asking for a meeting or anything like that. When I'm calling, I'm going to call accounting, right? Or whoever's handling from a, not like this, obviously the CFO, controller, they're going to be, looking at things probably from more higher level. I'm looking to get a little bit more granular. So I'm going to call the accounts payable usually, right? And that's going to be whoever's handling, if they have a team or whatever that may be, who's going to handle paying those freight invoices and, other processes, right? So when I'm calling into them, I'm asking, how do you one of the biggest questions is, how do you receive freight invoices, right? So freight invoices usually can come, believe it or not, I have people that more times than not, people are getting them either in the mail or they're coming in, per shipment, some consolidated, all over the map, right? And to this day, you would think, since 2014, it would change. It hasn't. So reason why I'm asking that is because, again, in my head, I know working for a 3PL, that's a challenge, right? We'll get a little bit more into it, but that's already a challenge I know I can solve, right? I can consolidate invoices. I can give you electronic invoices, and I could tailor reports. Again, we'll get more into that, but that's the reason why I ask off the bat, how do you receive your freight invoices, right? Why? To uncover if process is manual. Outcome, obviously, I look at 2 things, right? If I'm going to try to get a meeting with that CFO, right? Or I'm usually targeting CFO or CEO and have more of a, business conversation other than just not granular. But I still want to find challenges that are micro, right? Meaning, say it's accounts payable. The micro challenge would be it's taking a bunch of time to do tedious work that person could be doing other things that is going to impact not only their career or scale their career more and use their brain more, but the company in general, right? Then I'm going to look at that. Okay, so the manual process from receiving invoices, amongst other things, what's the macro, ripple effect from a financial or business standpoint that I could have a conversation with that CFO about? Well, again, time, but manual error, usually, again, I'll get more in depth with it, but it's a financial impact usually because if you're doing things manually, right, it's going to, there's manual error. People are, not really tracking costs, don't have an accurate way of looking at things. If chargebacks are happening while they're happening, usually chalk it up as a part of doing business, right? So bringing that attention, right? It's like, okay, I can solve the micro challenge, meaning can free up that accounts payable person's time, tailor their reports for them so they don't have to spend doing tedious work looking through all those individual invoices, right? But high level, I can also tailor reports, show you guys specifically each company, whoever I'm working with, their key cost drivers and what's going to really drive value inside their company. Show you, hey, maybe it's they're not tracking costs correctly, as you'll see in the bottom. They're not allocating their transportation costs properly. So I'm able to break that down from a cost to serve level. Again, I'll get deeper into that. So solution, consolidate invoices to keep that simple, right? Consolidate the invoices and, again, mitigate risk or mitigate manual error from paying things that you shouldn't having to pay when it comes into your freight transportation bills, right? So that's just one question. little granular, but that's, a little more deeper dive of why I asked that question. So second question is usually I'll ask is, how are you allocating your transportation costs? And again, all that's meaning is like, how do they look at, how is that company looking at freight, right? How are they, how are they breaking that down? What's their process like do they just pay the bill? Yes, but more times than not, there's some sort of process, checks and balances, whatever it is, there's going to be something as small as just like, hey, I want to make sure that the quote matches the bill. And I talk about that a lot, but there's a lot of other processes that go into there, right? So why do I ask this? I ask this is because I want to know how they're capturing or keeping track of their freight costs. What's their mindset about, their freight costs? How do they look at those things, right? And I want to know if it's a manual process, right? Again, it kind of goes in order, right? Manual invoices all over the map, manual process. Don't want to assume, but more times than not, if that's manual, it's probably going to be a manual. I couldn't tell you how many times to this day writing on invoices and whatnot, trying to keep track, trying to figure out why, allocating it back to maybe a department or a customer, whatever it may be, a GL code. There's a ton of different things companies do when it comes into allocating costs, right? But keep it simple. I just want to understand their process and their mindset when it comes into their freight transportation costs. So the outcome is, some of the outcomes, when I say outcome, challenges that I see is, they don't know their true cost to serve by as simple as the customer and location, right? And what I mean by that is, again, there's a ton of different variables when it comes into cost to serve, right? It's not just transportation, but specifically transportation, right? So meaning with all other costs, you want to, people usually, you would try to, you want to, you're never going to be 100% spot on, but you can be pretty accurate on, okay, what's it going to cost from a transportation standpoint for customer and the location, right? So if you ship into Walmart, you're going to, you ship into 100 different Walmarts. Most times I'll see is companies will just give a flat percentage, right? They'll say, hey, we're going to allocate our transportation costs 10%. So on top of their price, right, they're going to tack on 10% as a cost of transportation without really understanding if that is the true cost, accurate cost of transportation, right? And again, things change, market changes, but again, you can get pretty accurate with it. So that's a huge challenge, not knowing your true cost to serve by customer and location. And then you can go again, not to get super, super granular, but you could even take that further from a product level, service level, frequency of orders. You can switch it up, but it's a huge thing though, is the cost to serve, right? Because again, this is more of a, that conversation I'm going to keep it really brief when I'm asking these questions. How do you guys allocate transportation costs? If I'm talking to the person that, just the accounts payable person, right? And, but then I'm going to have that conversation, or when I try to set that meeting, say CFO, hey, listen, spoke with Pam, your guys' accounts payable handles, I know, she handles all your guys' accounting. You should know this, Mr. CFO, or I know, Pam, but she was explaining to me right now that you guys just do a flat 10% across the board for each customer and each location as a cost, allocating your transportation costs, right? So you're just tacking on 10%. I was curious if you knew the financial impact that's having on your company. So now I'm having that conversation from a higher level. I say macro, but again, it's a financial discussion. It gives that impression that I don't want to have a shipping conversation, right? I want to have a financial discussion or a business discussion to show the financial impact of their current processes, what they're doing right now from an accounting standpoint, reporting standpoint, and how that's impacting their bottom line. So again, not accurately allocating freight into price and into the pricing model. I want to go a little more into this. So the whole goal of this is to truly just to keep it simple is you want to know what you can do with a cost to serve analysis, right? You'll be able to see, okay, what customers are extremely profitable, what customers are average, and then what customers are low to negative margin, right? And again, you're not gonna knock it out of the park, or you're not gonna delete a lot of customers that are low margin. It's part of doing business, right? But knowing and understanding those customers that are, and then figuring out a solution or a way, hey, how can we add a couple more points to, increase our GP on these, right? Can we increase our GP on this? What can we do? You're just having that visibility into your true cost to serve is just going to bring more light into ways to again, know your true cost, know your true profitability, and figure out ways that you might have not even known you were, in the hole on certain customers and locations, and, a solution that you didn't even know you could possibly do when it came into, hey, maybe we just consolidate stuff, whatever it may be, figuring out if there is a way to increase that margin on those low to, or even maybe negative margin customers, right? And then again, like I said, it's not to get rid of those customers, because again, a lot of companies get into Walmart, right? It's a huge name brand, powerhouse. If it makes sense, probably even lose money, right? I've had accounts where more or less working for large corporations, they just like a Kellogg, right? It's like, we're gonna lose money on the freight, but it's a cool name to have. It's a good brand to have, right? So you got to just give and take. So that's that. I just want to go a little bit more in depth than that. And then lastly, big one is just like, even like, again, outcome from manual process when it comes to allocating, breaking down stuff is, I always say it, it's, not like, let's just say quoted versus billed. Accounts payable, usually, a typical process is usually shipping, writes down maybe like a GL code or a PO number, and ties in the freight quote they were quoted, sends it over to accounting, maybe like a weekly basis. Accounting matches up that PO with the actual invoices. If they don't match up, they reach back out to shipping and saying, hey, this doesn't match. Reach out to your person or vendor. And usually, it's back forth, whatever happens. It ends up more times than not talking with accounting. It's like, hey, we just usually end up having to eat it as a cost of doing business, right? So whose ever fault it is, right? Whether it's carrier, broker, or their fault, really doesn't matter at this point. Well, it does, but the focus should be on like figuring out the root of the cause, right? So that's a huge one. Not knowing the root of the cause of why these chargebacks or why these variances in quotes versus what they were billed are happening, right? So that's a huge challenge. So the solution, if you work for a 3PL, any decent 3PL, or hell, if you don't have to have crazy technology, just doing a little bit more. Hell, when I first started, we were only giving these type of service to like really boutique enterprise customers, and I took it upon myself. I mean, beginning of my career, my customers were doing $50,000 to $75,000 a year, but I was breaking out weekly reports for them. All I had to do was go internally, show them, hey, this is what you were quoted. This is what there was a variance, whatever. If there was, this is the discrepancy report. This is why it's happening. My bad. Or carrier keeps reweighing you, or hey, you guys are putting in you only giving the LTL carriers 45-minute lead time to when you're saying, hey, freight's ready. They need at least 2 hours, bare minimum. That's why you're getting missed pickups, whatever it may be, right? I was taking that upon myself. So you could still do that stuff pretty easily, right? And then obviously cost to serve analysis, put that aside. If you're brand new or just learning this stuff or haven't really spent much time when it comes into like accounting and this stuff, I'm still learning, right? And it's been like 5 years. It's like I didn't even learn this stuff till like 5 years ago. So it gets complicated. But invoice auditing, most 3PLs can do that. Again, if your company doesn't have that, you could still do that, right? Most companies you'll see is, especially what I noticed is most companies don't even know 3PLs do invoice auditing for free. Like there'll be, for instance, one of my good buddies, we ended up working together. He was paying someone before, we started working. He became a customer. He was paying someone like a percentage of whatever they found, whether that was in their small parcel or even freight, whatever they found in, discrepancies, they kept a percentage of it. Right. Whereas me working for the 3PL, we don't keep anything. We just, it goes back to you. Obviously we have to fight it, but again, we audit all the invoices. So if your company has it, great, start talking about that. If your company doesn't have it, still, I mean, again, depending on, the level of service you want to give. But again, it could be something as simple as the discrepancy reports, right? Weekly, monthly, whatever it may be. Hey, I'm going to give you a little bit more service, boutique service. We'll be able to break out, monthly reports showing you what you guys were quoted for all shipments, what you guys were billed. And if there's a variance, whatever that variance may be, come with a number, explain to you why during our monthly reviews. So this is just 2 questions. Why I ask the questions I ask, just these 2 questions when it comes to accounting. I can't stress it enough how important finance accounting is. Again, every department plays a role, right? But when it comes into, again, from my career, it's always been accounting. Shipping's great. They know, but I've always focused on accounting, right? Shipping they obviously have things they got to do a bunch of stuff too, right? I mean, it's logistics, transportation, but at the end of the day, the bottom line, the company, the profitability, all that stuff comes from again, accounting, finance, understanding how supply chain, logistics, transportation impacts the entire business more than just knowing the market for freight rates or, that's something so small, right? When it comes to think about that, when you're looking at things again, commodity, everybody's talking about the freight markets, right? It doesn't, at this point, the market could be high, low, whatever it may be. If things in their accounting process or finance department, if things like this are happening, don't know how to transfer or don't know how to allocate properly when it comes into, their transportation costs. I mean, yeah, if they're getting, and that's another thing that happens is they'll be negotiating. Well, our rates are too high. Our rates are too high. Well, not really. Your rates aren't really that bad. You're just not properly allocating transportation costs in your pricing model. And you can't do that for every customer. Like I said, everyone's different. There's going to be customers that you're going to run very lean margin, whatever it may be. But understanding the cost to serve versus just thinking we need to get lower freight rates. We need to get lower freight rates, and having that conversation with potential customers or your current customers saying, hey, listen, how long you've been doing it the way you've been doing it. You've been going out to bid all this time. You're not really saving much money. Every year, every month, you're having to just rate shop. And at some point, you got to take a step back and really look at other areas that are truly costing your company more money and, increase or lowering your profitability, not just because your freight rates are high, but again, these things like this. So I can go on and on about this. This is just 2 questions. There's more in my, I'm going to be really building out a lot more stuff when it comes into accounting and finance. Don't get too twisted about this. If you're new, I was on one. I've been on it for all day today. I just been thinking about this stuff. I don't want to if you're new, again, don't get too crazy about this. I would say simplify it as, hey, listen, if they have a manual process when they get their invoices and you work for a 3PL, you can consolidate them. Simple like that. Allocate and breakdown process, I would just say is quoted versus billed. How do you guys do that, right? How are you guys, do you allocate your transportation to warehouses, whatever it may be? You can just say you could tailor reports. That's your goal is. They're manually going through quotes versus bill. You can send them a weekly report so they no longer have to do that with the discrepancies of why anything didn't match why the quote didn't match that bill. Simple as that. Don't worry about the cost to serve. But for those that do want to learn about that, I'll be talking a lot more about that throughout the coming, I always talk about it, but throughout the coming months. So for the shippers, cost to serve, understanding, break those silos, shipping, obviously huge part of logistics and supply chain, but also accounting, finance, and executive leadership needing to be involved, because when it comes into cost to serve properly, switching your pricing model, again, at the end of the day, the company, that's the role of, I say, CFO or founder, owner. executive leadership, that's why those executives, that's what I say is like executive leadership. The biggest issue is executive leadership isn't involved when it comes into the supply chain. And that's why they need to be involved, right? Accounts payable, maybe they're not going to want to take that risk. Hell, the CEO is probably not going to let them, right? I wouldn't want shit. I had a boss to report to. I wouldn't want to do that. So everybody needs to be involved at some point to build out a true sustainable and scalable supply chain for year over year. So everybody's talking together. So that's my rant. Know your cost to serve. Freight brokers, learn accounting, learn if you don't look at things from how supply chain logistics impact the business, I would challenge you to start looking at things like that versus just market rates, fluctuations, things like that from just a shipping standpoint. Yes, it's good to know that, but understanding how it impacts, put that aside, understanding how other departments, other factors within the supply chain and company impact that business, not, from a micro level, ripple effect into a macro level, right? So that's, again, my rant. More to come. Reelsrare.com. You can get a bunch of free material, pay for material, or book a call with me if you want to learn more. And yeah, that's it. Have a good Sunday, guys.